Welcome to another episode of the Capital Playbook. My name is Charles Williams. I am the owner and managing member of Pioneer Realty Capital. Today I have something very special in store for you, but only if you like free money. Today we're going to talk about how businesses all over the United States are tapping into a source of free money. And to help us with that discussion, we have the folks from EMP Business Development and also Warburg Equities that's going to talk to us about the ERC tax credit, how that works, what the program was intended to do. And so please welcome my friends, Mr. Jason Pratt and also Mr. Terry Bleistein.
Hey Charles. Thank you for having us here.
Well, thank you for being on my show. And I think my audience is going to thank you too, because I think you have something very special in store for them. You're going to show them something that many people who are in business or operate businesses may not be aware of, and it could be significant. And we're going to talk about the significance of that. But before we get into that, Jason, tell us a little bit about you, your professional career and background, so our audience can get to know who you are.
And thanks again, Charles, for having me here. My name is Jason Pratt. I'm the president and founder of EMP Business Development, LLC. 51 years old, been an entrepreneur most of my career. Started out engineering blueprint applications for Boeing, got out of that, and I've had 16 companies since then. Founded, a lot of people ask me about the initials EMP. Well, I have a 9-year-old daughter, Evie Mae Pratt. And so I founded my firms based on my daughter. So that's where the initials came from. We're a full-blown firm here in Dallas, Texas. We do payroll, quarterly tax reports. We do our research and development. We've recently partnered with Warburg for ERC tax credits, small business loans, and we are going to have some other programs roll out. So that's our history with EMP.
Perfect. Terry, tell us a little bit about you.
Sure, no problem. So I've got Jason beat by a year, 52.
Okay. I got both of y'all beat, by the way, but go ahead.
Okay, I couldn't tell.
I thought you were like 40.
Yeah. That's why I tell people.
41 every year, right? So I actually got my career, most of my professional career was in telecom.
Okay.
Done that for most of my life. But in my career, as I started out, I was fortunate enough to be part of a lot of startups, a lot of entrepreneurial type opportunities where I was really young, didn't know what I was doing. And that kind of gave me the bug. And about 8 or 9 years ago, I kind of ventured out on my own, started doing more entrepreneurial things as I was consulting and working for some other companies, telecom-wise. And then maybe about a year and a half ago, found out about this ERC program through a friend of mine. And long story short, I partnered with Warburg Equities tax credits and started this journey. And we're excited to help these businesses because a lot of them, as you know, have been crushed.
Yeah.
When COVID hit. So I just saw it as a great opportunity, really, to help business. I mean, we're all here to make money. That makes sense. Everybody is, but I think more importantly, the business aspect and helping these businesses is the more of where the reward.
Okay, well, good. Well, it's interesting just hearing both of your stories. Both of you are, like most of our audience, are entrepreneurs. So you understand what it's like to start a business, the challenges that come with trying to run and operate a business sometimes on limited cash.
We're talking about the sweat equity coming over here.
Yeah.
Working for, months on end with zero revenue coming in as you build, your program, your platform, your back end, your strong foundation is what you need.
That's when you find out if you're an entrepreneur or entrepreneur.
Yes, that's
absolutely true. So now, I know when I met you, Jason, you introduced me to this thing that's happening in the government. You're so excited. You're like, man, these guys are giving away free money. And I'm sure that has to do with this history or the ERC tax credit. Tell us a little bit about the history of that program and how that works.
Well, first of all, I mean, I'll let Terry answer that, but I want to say this. I mean, as an entrepreneur and a business owner, and for all of you out there that are listening to this and watching us, there's nothing like having an influx of capital back into your bottom line. Yeah. And the beautiful thing about ERC that is different than PPP is you don't have to pay it back. And you can use this money to hire more employees, pay down debt, maybe save your business. And so why not get it? Why not get the money you deserve to scale your business or help out your employees? And Terry, you touch on the history of it.
Yeah.
And the nuts and bolts of it.
Yeah, for certain. Just to add a little color to what Jason just said, that is one of the differentiators. PPP was really payroll protection, right? So it had to be allocated towards your payroll. Mm-hmm. This could be allocated for whatever the business owner wants. So if this business owner may be paid hundreds of thousands of dollars, which many did out of their own pockets, depleted their own personal savings. If they need to refill the coffers, they can do that. If they want to re-inject capital into their business or the bottom line, there is no guidelines that say you have to use the money for this or for that. Does that make sense?
Yeah, it makes a lot of sense.
So just a little bit, I won't get too deep into the weeds, right? Mm-hmm. So, but the ERC, it's some people say ERC, some people say ERTC, Employee Retention Tax Credit or Employee Retention Credit. It's only been around for about a year and a half or so. It does have a timeline on it. It's got about another 2 years or so. The IRS guidelines in this have shifted, as you can imagine, quite a bit. There's been several changes to it, but essentially what it is it's a reward that businesses can get if they have to have W-2 employees. That's number one. But as long as they had W-2 employees and as long as they stayed open and kept their doors open during COVID, they may qualify for this credit. So it's, there are different factors. There are revenue decreases that can take place. So it's a 50% revenue decrease in 2020, 20% in 2021. Those are easy ones to figure out because our CPAs can just simply look at their 941s and figure out, hey, there is a significant revenue decline. Those are easy ones. The not so easy ones are when you get into the mandates, right? So I'm sure here in Texas, not so much where I lived in Florida, but in many other states, there was a lot of mandates that affected these businesses where they could not open their doors or depending on the type of business it was, right? So there are specific mandates that are tied to that our team of CPAs will go out and they'll look at and they'll tie it back to those mandates and the businesses can also qualify that way. So what I like to tell everybody, because everybody, when you see the advertisements that are out there, right, and they're everywhere, right, we have a little bit of a different approach, which we can talk about a little bit later. But everything is predicated on this up to $26,000. That's kind of a unicorn, if you will. I haven't really seen that much in the files that we've done. But what I tell everybody,
so people are not getting the 26,000.
It's very rare. Like it's almost like the stars have to align. Everything has to be perfect. I'm not saying it doesn't happen and can happen, but I rarely even see businesses qualify for every quarter because they may not have had revenue drops in all quarters, but they might have gotten crushed the first 3 quarters when COVID hit. Maybe they started recovering in 2021.
Well, I'll tell you what, let's back up because we're getting deep, and I can tell that you're a professional and you know this inside and out.
I told you to take me out of the rabbit hole.
Well, I want to make sure that our audience really understands exactly what this is because I can remember, coming out of that PPP thing, and I heard that there was some type of tax credit that I might qualify for, but I didn't know any details about it. So let's, for the benefit of our audience, let's start with some of the basics. What is an employee retention credit? What exactly is that? So
if you're asking on the definition side, it is exactly what you just said, right? When the CPAs go in and they break down this ERC, depending upon what your payrolls look like, you literally have line item. Let's say you have 10 employees, okay? Depending upon where they fall in terms of payroll, if you took PPP, that has an effect on your credit. They'll go, when they provide the analysis back to us, it literally goes line item by line item. Here's how much retention credit you will get for this particular employee. It literally breaks it out.
Does it based on the individual employee.
Yes.
And the catalyst to determine if that business per employee qualifies is a drop in revenue for the business, or what determines
and/or mandate.
Okay.
So some businesses actually made more money during COVID.
Right.
Okay. But that doesn't necessarily mean that they don't qualify. What I try to tell all of our clients is that, and this is part of where I think we're very unique, right? I tell everybody, every client is different. No client is the same, right? And because we don't charge anything up front, there is no, if we're unable to find any credits for the client, they owe us nothing. What they've lost is a couple hours of time. I mean, there is some time that's necessary to gather the documents and do all that, but there's no harm in it. If we can't qualify them because they don't qualify, they made too much money and there was no mandates, fair enough. They don't owe us any money. Zero risk.
And we still have to pay our CPAs.
Yeah. We still pay the CPAs, but in our engagement agreement, it specifically states that you don't owe us any money if we can't find you any money.
Yeah. And, one of the things for me, I kind of put it on the back burner because I'm so busy trying to run my business. And then I felt that, well, I'm in the real estate business, and of course the government was so negative towards real estate businesses during that time. I mean, they were literally going out telling people not to pay us rent, but they didn't stop us from having to pay our mortgages.
Of course.
So I really didn't dig into it too much. But now hearing from you guys, if you're a property management company that obviously was impacted by that, if you are a hotel owner who was obviously impacted, or a restaurant that was probably impacted.
Restaurants got hit really bad.
Yeah, or a retail shop, because if people can't come into your retail shop, and so what you're saying is, if I'm an owner of those commercial properties and I have W-2 employees, even though I may not be the tenant in there that's doing it, but I'm a real estate investor and I have employees that are W-2 employees, and I'm impacted because I'm not getting rent, right? Then those W-2s, those employees could qualify, or I could qualify for the
under your umbrella, right?
Under that umbrella. Well, that's interesting. I never thought about it like that.
Yeah.
Well, hotels. I mean, if you think about hotels, absolutely they were impacted for numerous reasons.
Right. Obviously, social distancing.
Social distancing. People weren't, just because people weren't traveling, that's not a mandate. That's just a byproduct of COVID.
Right. But if they're not traveling, your revenue went down.
Right. So your revenue decreased, but also even when hotels, because I was traveling shortly after, you probably were too. Think about how much cleaning had to take place. What types of protocols were changed, right?
So does it look at, so that's a good point. So maybe my revenue stayed the same, but my cost of operations went up.
Sure.
Does that qualify me for the employee?
Not necessarily. So I'm not the expert because I'm not the CPA, but it has to be more than a 10%, more than a nominal impact. So there has to be, it has to be mandate driven, but it also can be things like, hey, if you had to drastically change the way your business operated, which everybody did during COVID, that would have had impact on your business. At the very least, it's going to impact your revenue.
Sure.
Right? Because you might have been spending 10% of your profits on cleaning supplies. Now you're spending 20%, 23%. It doesn't matter. And you're hiring more staff. Maybe you're hiring cleaning companies, right? So your revenue is going to take a hit either way. So,
so let's walk through the process of what this would mean for, and I'm going to give you a scenario. You walk me through this.
Sure.
I'm a hotel owner. I have a staff, my managers, my cleaning people, maintenance people, and they're all my W-2 employees.
Yep.
And, because of the area where I am, my business dropped, 30, 40%. Okay. And I see one of your ads or word of mouth, and maybe I saw this podcast, right? And
that's what we're hoping.
And I call you up. Walk me through the steps like I'm 2 years old, well, maybe 3 years old. Okay. Walk me through the steps that would lead me to benefiting from this ERC tax credit. And then I want to understand, what kind of real dollars am I looking at? Because people are saying you're going to get $26,000 per employee, but you just shared that that's unrealistic. So just kind of walk me through how that works.
He's right. And remember how we did it with the we started off when the girls got there this morning? Yeah. Kind of like from the engagement letter.
Yeah, for sure. Through, so you just to make sure I'm clarifying and understanding what you're asking is, if you're let's say one of EMP's folks have engaged you, or you've engaged them, right? And so you're going out and you are wanting to get information. You're asking me how that process works. Is that right?
Well, I want to, from the very beginning to the end, I want to get a sense, because, and I'll tell you why I'm asking this question.
Signing up, the whole nine.
Well, I want to ask this question because I think the impression among a lot of small business owners is this is going to be a time-consuming thing that's going to take me away from my business, and at the end of the day, it's not going to be worth very much. Right. So that's really why I want to give our audience a sense of how this ERC tax credit thing works, and is it really of value? Is it worth the time that I'm going to have to invest to get this quote-unquote $26,000 that we now know may not be realistic?
So that's a great question. So I'll kind of step through this in stages and bring me back around at the end, because when you talk about is it worth the time, I want to give you an example.
Okay,
so
good
don't
deal.
let me forget that,
all right,
because I'll go all over the road.
Use the tree service.
What's that?
Remember the 1.6 million?
Oh yeah. So
there's.
I'll give you an example, but just to kind of take it from the beginning, right? So the very first thing you would do if you talk to somebody and they engaged you is they would give you they should give you a high level overview and explain what the program is. Because even though it's out there everywhere, most people, if you ask them what it is, I've never heard of it, or I don't know what you're talking about, or I've seen commercials, but I don't have time to look at it.
Right.
They're running a business.
Right.
So they'll engage you. They'll talk to you a little bit about the program. They'll pre-qualify you in terms of making sure that you have W-2'd employees. Very important.
Right.
We cannot help somebody, unfortunately, that has contract employees or 1099s, which a lot of people do. So you have to have 1099 businesses. You have to have been established during those years. Obviously, there's just little pre-qualifying questions that they'll ask you. Once you get through that piece, first step in our process is an application. Our application, there's other companies out there that, hey, give us a few pieces of information. We do a different approach. We're more of a grassroots type of organization. We're not looking to do tens of thousands of files a month. We're focused on quality, not quantity. And so we'll go through an application process, and if somebody from EMP would sit down with that business owner and walk through the application process with them. Why is that important? Because we want to make sure that they understand everything that they're needing to give us, so that we can have an accurate assessment, right, of where they stand, right? After that, we'll take a look at it on our back office side. Our CPAs will take a quick glance at it and make sure we have something there, because they'll give us a little bit of financial data, not a ton. It takes about 25 minutes, 30 minutes if you're asking a lot of questions.
Right.
From there, usually if all looks good, we then move into signing an engagement agreement. All that simply says is that if we're going to do the work for you, that you're agreeing to pay us if we're able to recover monies for us.
Okay.
At the very beginning, we didn't do this, and we ended up having our work product taken to other places, and the CPAs don't care; they want to get paid.
Right.
And I understand that.
Right.
So once the engagement agreement is completed, then EMP on their side, they're pretty much done. We take over. Our Warburg Equities takes over on our side. We have document processors that will then reach out to there's a warm handoff that takes place. We reach out to that client and we say, hey, Mr. Client, Mrs. Client, I'm so-and-so from Warburg Equities Tax Credits. We're going to start gathering this documentation, and EMP would probably give them a heads up. Hey, here's a checklist of what you're going to need. Simple stuff, right? Your 941s, P&Ls, detailed payroll reports, health bennies, if you had them. Those are the main documents that you need. Nothing, tax returns, just to make sure there's no issues there. But these are all, and by quarter, right? So your quarterly 941s. So our document processor will work hand in hand. That is where, when you talked about the time aspect, look, we're very transparent like a piece of glass. It depends on the size of the business, right? If it's a larger business, you hand it off to the CFO. You ain't got to worry about it. They already have that. It will take a couple hours of their time. They can do it at their pace, but we ask that to try to get it done quickly so we can, get their credit processed quickly. So it does take a little bit of time to get done. Once they get all the documentation into us, our team will take a look at it. On the back end, they'll make sure all the docs are there. Then we give the warm handoff to our CPA. That CPA will then engage directly with the client if they have any questions, clarification items. Hey, I don't understand this. 941 here, something looks wonky here, whatever it might be. And then they will work on completing the file for the client. Once the file is complete, we do I don't know how you would, probably like a client, it's not a client intro call, but basically they'll engage the client once it's finished and they will walk through. It's 15 or 20 minutes. They'll walk through the completion of the file. Here's how we arrived at these numbers. You got X amount for these quarters. Here's how we arrived at it. And then, a presentation call, I guess is what you could call it.
So now once you've come to that number, you put that, you have your presentation and that client signs off on it, then you submit that to the IRS on behalf of the client?
Yeah, the client has to sign. Excuse me. The client has to sign the 941Xs because they're amending their tax returns for those years.
Okay, so this tax credit comes in the way of an amended 941?
Yes. Yep,
941X.
Yep.
Because so they're applying the tax credit for the payroll tax or employee tax.
Yes.
Ah, interesting.
So it's because you're right now, and we may start losing quarters here, but right now it's quarters 2, 3, and 4 of 2020 and quarters 1, 2, and 3 of 2021. Okay. Those are the qualifying quarters.
Right. So
that somebody could qualify.
So just for clarification, and now I understand why that company would have to have W-2 employees, because every quarter you're completing a 940 and 941.
Correct.
That goes to the for your payroll taxes, and so now you're getting a tax credit on the employer portion of the tax liability. Is that correct?
Correct.
So because the employee pays taxes, they're federal income taxes, but the employer portion, that's what's being reimbursed.
Yes.
Okay, gotcha. And so once the client has signed off on this thing, it's been submitted to the Internal Revenue Service. What is the time frame from the time you submit and you start getting a check back?
And remember to give him variations between 500,000 versus over $1 million.
Yeah, so it's a great question. So we're dealing with the IRS. So unfortunately, it's not very efficient.
I've heard that before.
Yeah.
But they don't bounce checks.
Right.
Yeah, that we don't have to worry about. So typically what we're seeing right now, even on the smaller files, when I say smaller files, even $200,000 to $300,000 in credit. they're taking upwards of 6 to 9 months.
Wow.
On the larger files, when I say larger, like $1 million and over, you're looking at a minimum of probably 12 to 14 months.
12 to 14 months. Wow.
Yeah.
Now,
But hold on. However, tell them about the different programs.
Which ones you want?
Like the advance, yeah.
So one of the things that we saw early on is this issue, right? Even if it was 2 or 3 months, right? Because I always say this to all of our sales teams. Every client is unique. Every client situation is unique. Some are cash flush. They need the money, so like, I don't care. I'll wait a year. Whatever. It's like an annuity. But the other ones are like, listen, I need money today. So what we offer for our clients, I believe the minimum is like around $200,000 to $250,000. We will actually do a credit advance.
really?
On the receivable, right? So, if they're going to get X amount of dollars, let's say it's $300,000, $400,000, there are extra fees involved, right? Because there's much more risk involved.
Yeah, and you're selling money, so there's cost of money, right?
The cost of money. But we will actually advance if let's say they're in dire straits and they're like, look, this is free money. I need this money like as soon as I can.
And they're willing to pay the extra fees.
Yeah, they're willing to pay the extra fees. It's usually about a 30-day process, give or take. Depends on how long it takes them. It's an underwriting process. Obviously, you can understand that goes on. But we can get them that money usually within about 30 days. So they will basically finance the receivable.
Wow.
That way they can use the capital faster and not have to wait. And that's one of many things that separates our firm.
Is that something exclusive for your firm that you're basically factoring these?
I don't know that it's exclusive. I've heard of others. I think what's unique about us is ours is truly, we're truly financing the receivable. I don't want to speak about other companies because I haven't. There's a lot of them out there, and I don't know their process. But I've heard of others that do it. But it's more of like a factoring type of deal where it's not really a good deal for the client. We're not looking to we're looking to leave as much money in the pocket of the client as humanly possible.
Yeah.
Right. So we're not doing like a hard money loan or a factoring type where it's not beneficial in that case. That's if somebody's in really desperate straits.
So you can take that time frame from that could be as much as 12 months or more and bring it down to 30 days, by financing that. Now, do you finance 100% of the receivable, or do you finance a portion of that, and then the remainder gets released once those funds come in from IRS?
No, we whatever it is minus the fee, we're financing all.
Wow, that is great. Yeah. So that's why I guess that's why you said some are kind of like factoring, because if it's a factoring,
some of the other ones do.
Yeah, they're going to keep. They're only going to fund like 70% of the receivable.
Right.
Yeah, and they're also going to charge you 12% or more. For factoring, and it's not a good deal. It's not a good deal.
And they start wanting their money back. So ours is, basically we're buying the receivable. We have large equity partners that we work with that are willing to do that because it's backed by the IRS.
Right.
It's just
pretty good credit.
It's pretty good credit.
Yeah, again, they don't bounce checks.
And that's one of the reasons why we focus on quality. We take all the steps. We want to make sure, because look, we're taking on the risk as well in that particular case. So
let me ask you, based on the transactions you've seen, what would you say is a reasonable average for most businesses that they can expect to receive back? And the reason I ask that, because everybody's wondering, is it worth my time?
Sure.
Sure.
It is the question. Matter of fact, Priscilla asked me this question probably 10 times already. It's a tough question to answer, and it's a little bit of a loaded question because, as I said before, and this is why I say it, because it's true, every client is unique. So let me just give you a little bit of color on that.
Okay.
If a business, let's use an engineering firm. Okay. Let's say that engineering firm has 10 employees, but each of those employees makes $60,000 or $70,000 a year, but they were crushed by COVID, right? That's a great candidate. Why? Because, again, just like anything else, you can only take out what you put in.
Right.
Make sense?
Right.
Now,
so you're getting a credit back from taxes you've actually paid.
Right. So you're going to max it out typically if you had a revenue drop on something like that, because you've paid in a lot because you're paying your people 60, 70, 80 grand a year. But if you took a same type of company that had 10 employees and you paid them $15 an hour, right? Your number per employee is going to be a lot less because you just haven't paid anything in. Does that make sense?
Right.
So that's when I said the statement of up to 26,000. It sounds great. It's a great marketing tool. But if I were to give a general, very general average, from what I've seen, it's somewhere between 6,000 to 9,000 per employee, maybe 10,000. Again, it depends, right? Like we just did, not just did, but we did a farm, a large tree farm out in Oklahoma. We got them back like $2.4 million.
Wow.
It was huge. But they're a big company. They have a couple hundred employees. But they took advantage of the credit advance because they ship to a lot of the big box retailers, right? Lowe's and Home Depot. And so they needed that cash, right? And I think there's per employee.
How long did it take for them to get their money? Probably over a year, because that's a big deal.
It would have taken. Oh, that would have taken.
But you guys advanced them?
Yeah, we've already advanced those monies back out to them. We still have a couple installments, but they've already gotten their first one. But that one came out to about $9,000 per employee. So I mean, that's a good general average. So if you're a small business and you pay your people fairly well, and you have, let's say, 20 employees, you might end up getting a substantial amount.
Yeah. I mean, it is interesting to hear of a small business receiving $1 million in refund from the government. Who wouldn't want that?
Sure.
And I think that is the question that most people have. One, is it worth it? And I'll tell you, I'll also share with you some of my initial reservations about participating in the ERC program.
Sure.
I look at the quality of people representing the program.
Yeah.
I
hear you.
It sounds scamish.
Sure does.
You know what I mean? And to some degree, I'm certain there's probably some kind of scam going on with it. Especially, I've heard of people charging upfront fees. To process something that. Is free, and then I've heard
may not get approved.
Yeah, and then I've heard of people.
But they'll give your money back to you, don't you know?
Is that right? I don't know.
Allegedly.
But I think most of us, especially if you're a business owner, we've learned, and if we're successful business people, we're very sensitive to things that sounds too good to be true. And I would imagine that you guys have to deal with that because your deal is real.
Oh,
you're qualifying them for free money. You're going to advance them on that free money. All they have to do is provide a little bit of information so that you can see if they qualify. And it's not going to cost them anything.
Nope.
That just sounds too good to be true.
Well, and let me touch on that though for the people that are listening. If you go into Google, there's hundreds of ERC companies. Beware. Look for understaffed companies that don't have the qualifications to even do this. Look for firms that they just don't have enough they don't have enough CPAs. This is a 200+ page report, not just any. And God bless your CPAs that take care of your companies and you have a relationship with. And we're not saying anything about them, but this is a specialty. This is not a normal tax return. And one of the reasons that EMP teamed up with Warburg was on purpose because we have the staff to do this. We have the qualifications. We have the analysts. We have the tax attorneys. We have IRS agents. We do this, and like Terry said, we're not looking for hundreds of thousands of files to process. We're specifically looking to turn out a good work product.
Yeah, and you guys have a track record that legitimizes what you do. because you've helped hundreds of businesses already. I guess it's kind of unfortunate that you're having to swim in the same pool with people that may not be, playing fairly.
And it's no different than I call it the PPE palooza. Everybody, lawyers could dump their law firms to sell medical gloves and masks during COVID, and there were so many scams. So there is a bad taste in the market space's mouth because of what happened in PPP. So or PPE. So a lot differentiates us, and basically it's our qualifications, and it's the work that we do, and how well staffed we are.
Yeah. So in fact, that was actually my next question, and I think you guys have kind of answered it just in our conversation. But I want you to specifically kind of bullet point out, Jason or Terry, if you're going to bullet point your value proposition. And I think I've captured some of those bullet points, but if you're just going to make that stand out and you're pitching to our audience here, what makes your firm more valuable than the 100,000 other people that are out there trying to offer this service?
I'll give mine, and then you tell me what you think about EMP. With EMP Warburg, we zero risk. We do not ask for any upfront fees. If we don't get you approved, we still have to pay our staff, and we are very meticulous with trained CPAs in-house that goes through all of your files. And if we get you approved, it's because you were qualified. Yeah. And what else would you like to add?
So, I think one of the things that differentiates us, and what I alluded to earlier, we're not looking to go out there and do mass quantities of files. We're definitely scaling and growing, but again, we are truly focused on quality, which is why we kind of took a step back, took some extra time, built out our back office team. And if you think about this for a second, right? Our name is Warburg Equities Tax Credits. Any company that has the letters ERC in their name did not exist before ERC started.
Interesting.
Does that make sense?
They're a pop-up.
There was no ERC.
So you've been in the tax credit game prior to this.
Well, we have been in the in the lending space and in helping small businesses. And I think some of the other value propositions that you and I were talking about, Jason, earlier, along with this is when I say we take a different approach, all these other firms that have ERC in their name and some that don't, right? And there's nothing wrong with it, but they're pounding text messaging, commercials, nothing wrong with it,
right?
At all.
Right.
Our approach truly is grassroots. Our people go and sit down with the clients. They go into their office just like you and I are talking right now, and they sit down face to face. It's a personal thing. We've lost, Zoom is great, but we've lost some personal touch. Right.
One of our reps in Houston, who's here in our Dallas office today, she literally, all of her clients, she personally knows them. She walks in, sits down with them, goes in their office, discusses a program with them, and then there's follow-up calls and stuff like that afterwards. Yeah. But it is a more personable approach.
It's different.
Yeah, it's not a sweatshop of files and hurry up and let's make some money. Right. It's because in honestly, to be very honest with you, it's like EMP business development. We do way more than just this. It wasn't just about ERC. We've had clients for years, and way after ERC is gone, we want to have these relationships because there's research and development isn't going anywhere. Neither is the need for small business loans and different audit services. Yep. Yeah. So that's the relationships really is the business model. Right. Yeah. To be quite honest with you.
Yep. Okay. That's what I was just going to say. Like we're just to add to that, just what Jason said, that one of our differentiators is, ERC has a shelf life, right? So it is going to be ending. But we talked about research and development credits. The CPAs that we work with absolutely do those. They're not available for all businesses, but engineering firms would be actually a good one. any type of medical facilities, scientific labs and things like that. Great targets for that. But also we want to expand. This is like a full service type. This is our goal, right? Full service, right? So it's ERC, R&D, could be small business loans, could be debt restructuring. Anything that a small business might need from a financial aspect, we want to be right there to be able to provide.
So you guys are, and I can see that as part of your value proposition, having that financial services aspect to what you do.
100%.
So let me ask you this. If you were going to give that small business owner 3 words or 3, I guess, concepts or advice as they go through this process. You know, they're a small business owner, their heads are down, working hard. They know about this ERC tax credit, but they haven't had the time to do it. If you were going to advise them, what are 3 points that you really want to bring home to them?
It's a really good question.
Be patient with us.
Well, look,
That's your advice.
It is.
Well, we do it right. To do it right takes.
It is a time. It is a time commitment. So, one of the things that I would say, because look, it depends on this. You brought up a great point, right? Because the ones that I really like to help, and what's most rewarding is you're actually helping small businesses that were just absolutely crushed and gutted by COVID. A lot of them were. Yeah. Depending on what state you're in, right? But most anybody was affected. But point being there is that with our particular program, there is a time commitment that goes into it. If you're a really small business, you're the CEO, you're the CFO, you're everything. HR, dishwasher, toilet cleaner, chief toilet cleaner, right? You're everything. Right. So, there is a time commitment. So there's no way around that. Any company that tells you that there's no time commitment is not being upfront with you. Right. There is a time commitment. What I would tell everybody when you talked about before, hey, the business owner is sitting there saying, is it worth it? Right. Here's what I would say. Let's say it took you, let's just say it took 10 hours to gather everything with the questions and the application. Let's say it took 10 hours, but you got back $100,000. Is that worth your time?
I think that's $10,000 an hour, right?
Yeah. I'd work. I'd work for $10,000 an hour.
I'd do a lot of things for $10,000 an hour.
I would. I would.
And you know what I like to tell business owners? It's your money. Right. You don't want your money.
Right.
Well, that's the whole piece about it, because it literally is. There's no strings attached to this. I mean, there's fees and things that they have to pay, of course, for the work we're doing, but this is free money that they can use to put right to the bottom line of their business to use however they want. Smart business owners would take that money and say, "Look, I'll take that money and I'll get a credit advance because I can turn that money over 3, 4, 5 times in 12 months."
Right. Yeah. Especially if it's a successful business is generating 12%. Yeah, 12% return on its money. That's you got more money to grow. Yeah.
Right. I would do it.
Yeah. Yeah.
Right. So
your advice would be to give it a shot.
Yeah, 100%. Take the time. Again, there is zero risk on their side. If I am ever talking to a client, the one thing I will tell them, well, what's my risk? Well, the risk is you could spend a couple hours doing this and find out you don't qualify. That's your risk. Right. But if we don't recover money, you don't owe us a dime.
Not a dime.
Wow. Well, man, that sounds like a
it does sound too good to be true, and I would
win-win proposition. Yeah. Well, I mean, if you think about it, there are a lot of programs out there. PPP initially sounded too good to be true, but it worked, and a lot of people got money. And this is another tax credit that individuals get an opportunity to participate, especially small businesses. It's your money. The government allocated it to you, and it's going to run out soon, right?
Yes.
Yeah.
Well, the money's not going to run out, but the time frame
to apply.
The time frame. Yeah, we've got about another 2 years. That number can shift a little bit, but just say approximately we've got about another 2 years.
Okay.
So Don't delay.
All right.
Don't waste time.
Well, Mr. Jason Pratt and Terry Bleistein.
You got it.
These individuals are here to help you get some of that free money. I really appreciate you guys coming on the show.
Thank you for having us.
And I think that individuals in our audience, many of these individuals, again, small business owners, working hard, heads down, don't realize that money's available to them. If you want to reach out to Jason or Terry, their information is on the board, or on the screen rather. Please reach out to them. Their phone number is there. I know these guys personally. I can vouch for them, and I can tell you that they can absolutely help you. So you owe it to yourself to take the hour or 2 hours or 10 hours, whatever it takes, gather the documents that you need, send it over to them, let them process it, and then see what happens. And for all of my friends and people that follow this channel in real estate, you may think you don't qualify, but I bet there's a larger number of you guys that probably do. So again, thank you for being a part of our show. And if you like this show, show us some love by liking the episode, sharing the episode, sharing it with all your friends, and following us on our social media. So please join us again here on the Capital Playbook, where we talk all things real estate, and with this episode and others in the future, where we're going to put some money in your pocket. Thank you very much for joining us.